All right, let's talk about Corning. Man, what a wild ride their latest earnings report was. It is one of those stories you just got to see to believe, a textbook case of market whiplash. The headline numbers looked amazing, but the stock went on an absolute roller coaster. So, we're going to dig in and figure out exactly what happened, and more importantly, why. And this right here, this is the heart of the mystery. I mean, think about it. Corning did everything an investor could possibly ask for. They beat on earnings and they raised their guidance for the future, the classic beat and raise. So what happens? The second that report comes out, the stock tanks pre-market. You have to ask yourself, what on earth did the market see that made them hit the sell button so hard? And just look at these numbers. It's not like it was a small beat either. Core EPS, 67 cents, a solid beat. Core sales, $4.27 billion, another beat. And then they go and guide up for the next quarter for both sales and earnings. I mean, come on. By any measure you can think of, this was an absolute home run, a total slam dunk. This chart just shows you the insanity. Look at that. We start with a 7% drop pre-market. Okay, that's ugly. By the end of the day, it recovers a bit, down just 3.3%. But then, the very next day, the story completely flips on its head. The stock shoots up 4.5%, and it's a brand new 52-week high. So we've got to figure this out. What caused that initial panic, and what made everyone so confident to come piling back in? Okay, so let's get into it. The beat versus the warning. It all comes down to one single part of their business, optical communications. This is where you find the good, the bad, and the ugly all rolled into one, a real tug of war. All right, let's start with the good news. And it is really good news. A 58%, that's right, 5-8, jump in their AI-driven enterprise sales year over year. This is the generative AI boom, people. It's happening right now, and Corning is smack in the middle of it, selling the essential fiber that makes it all work. And this slide really lays out the two sides of the coin perfectly. On the one hand, you've got this incredible AI boom, that 58% growth, just massive demand. But then you turn the coin over and bam, geopolitical reality hits you. China slaps a nearly 38% tariff on their optical fiber. That is a huge deal. And that right there is the headwind that sent investors running for the exits at first. So you might be asking, what in the world is an anti-dumping tariff? Well, think of it like this. It's basically a protectionist move. China is saying, hey, we think U.S. companies are selling fiber here too cheaply, and it's hurting our local businesses. So they add this huge tax to make the U.S. product more expensive. And for a company like Corning, that's a direct punch to the gut in a really important market. Okay, so that's the fear. But here's where the story gets interesting. While the market was freaking out about the tariff, Corning's management team was on the earnings call, painting a very different, much bigger picture. They kept pointing back to their big strategic plan, called Springboard, basically saying, hey, look at what we're actually building here. And you know what? They brought the receipts. The CEO, Wendell Weeks, just laid it out plain and simple. He said, since we started this Springboard plan, our sales are up 31%. Okay, great. But get this, our earnings per share, the actual profit, is up 72%. That is more than double the rate of sales growth. That's what you call incredible execution. They're making way more money on every single dollar of sales. And here's even more proof. Look at this. The whole goal of Springboard was to get their operating margin up to 20%. Their original plan, get there by the end of 2026. Well, they're about to hit that target next quarter, a full year ahead of schedule. I mean, that's phenomenal execution. You can't argue with that. And management wasn't just talking about the past. They were like, you think that's good? Look at what's coming next. They laid out these huge growth engines. First, they say the next wave of AI could be 2 to 3 times bigger than what they're seeing now. Second, they're building this massive new solar business right here in the US, targeting $2.5 billion. And third, they're deepening their work with Apple, one of the biggest companies on the planet. This is the long-term story they wanted investors to see. All right, so let's land the plane here. How do we make sense of all this? You've got this scary short-term headline from China on one side and this incredible long-term growth story on the other. For us at Talk Tickers, here's our take. Bottom line, we are putting an outperform rating on this stock. That initial drop, in our view, was a classic knee-jerk reaction, but the smart money figured it out fast. The rebound proves that the real story, the bigger, more powerful growth story, is what truly matters here. And looking ahead to next quarter, we actually think management might be playing it a little safe. With the AI tailwind and that new solar business kicking in, we wouldn't be surprised to see them beat their own guidance. That's why we're setting our price target at $95 to $105. We think the market is going to keep focusing on that massive AI and solar story, and that the China tariff will fade into the background. Okay, last thing, let's talk strategy. This is the trade idea. So if you believe this story, how do you think about it from an investment perspective? And again, this isn't financial advice, just a way to frame the situation. The whole thesis here is what we're calling the China headwind fade. That sharp rebound after the drop, that wasn't an accident. That was the market doing the math in real time. Investors realized that, yeah, the tariff stinks, but the growth coming from AI and solar is so massive that it's going to completely overshadow that problem over the next year or so. The drop was just noise. The rebound, that was the real signal. And as always, please remember, this is not financial advice.